CoreWeave going public today on the NASDAQ. It is the biggest U.S. tech offering since 2021. The company priced the IPO at $40 a share. That was below its expected range. It's going to be trading later today under the ticker symbol CRWV. And joining us right now, first on CNBC, right here on set, is CoreWeave's co-founder and CEO, Mike Intrator. And Mike, thank you for being with us today.
Thank you so much for having me. I'm really excited for the day. I'm really excited for CoreWeave, and I'm looking forward to speaking to your audience.
I know this is a really big deal for you all. Based in Livingston, New Jersey, you all have come a long way from what you started out. You are building out databases, and you started doing that for Bitcoin mining and other operations. You jumped on the AI trend, and you were there early, and you got to these data centers and are building them out at an incredible pace, building up revenue at amazing, phenomenal speeds. I think revenue growth of more than 725% for the last year. But you're also taking on a lot of debt to do it. And the IPO that came out is the biggest tech IPO since 2021, but it was below expectations. What happened when you were out there on the roadshow selling this?
Yeah, look, it's clearly a tough tape, right? Like, you know, there's a lot of headwinds in the macro. There are headwinds in the AI trade. And, we definitely had to scale or right-size the transaction for where the buy interest was. This is going to be a very, very exciting transaction for us. It does an enormous amount to move the company forward. It positions us for the next stage of growth for CoreWeave. And this is just an incredibly fantastic time to begin that journey. Going public is just a day in the life of an incredibly long-term transaction and business that we're building.
You're raising about $1.5 billion. I think expectations at the high end would be that it could be as much as $3 billion. Still, $1.5 billion is a big chunk of change. I think about $1 billion of that is slated to pay down debt. Is that the case?
Yeah. So we're gonna pull in the $1.5 billion later today. It's very exciting, and then we're going to use that to pay down some debt. We're going to use that to continue to expand our footprint, to invest in the human resources, to build the business and continue to scale it at what has been an absolutely unbelievable pace over the past several years.
Yeah.
It's really exciting.
The pace has been breakneck. It has been phenomenal to watch, but there have been questions that have been raised this year by what we heard from DeepSeek earlier this year about whether all of these companies will continue to spend at the same pace, whether they're still going to need the same computing power. What do you say to investors who are looking at this and have some of those questions?
DeepSeek was one of the most amazing dislocations that I've ever seen, right? Like, from the perspective of folks who watch your show, DeepSeek triggered a bedlam, right? But on our side of the table, on the compute side of the table, where the rubber hits the road, there were only two things that actually happened. There was a massive spike for spot computing costs. And then there was, my phone just blew up, and it was all of my clients trying to figure out how to build bigger, how to build faster, how to bring on more infrastructure as they continue to move forward.
Why did DeepSeek spark them wanting to bring on more computing power?
Because they looked at it as this is a normal kind of progression of how compute is going to be used, and as the space continues to move forward, as the compute becomes cheaper, they're going to have an opportunity to integrate their solutions into a broader part of the economy, which will lead to more demand.
So Jensen Huang of NVIDIA has said the same thing, because NVIDIA shares took a big hit when this news came out. He has said that it means that it's going to move beyond just the biggest companies, the Microsofts, the Amazons, and others who are investing on this. Have you seen that yet? Have you actually seen smaller customers who have come in and said, we want to get on board with this?
Yeah, so we've seen all kinds of customers. I mean, it's been everything from the AI labs like OpenAI that just did an amazing contract with us a couple of weeks ago, to JP Morgan, to IBM, to Jane Street, right? Like, it's just an incredible breadth of companies and enterprises that are really moving forward to begin to integrate this infrastructure into their business models, into how they drive their business forward.
Let me bring up a couple of things from just the last week or so. On Tuesday, Joe Tsai, the Alibaba CEO, got up and said in front of a conference that he thinks that there is a bubble forming in the data center business at this point. The second is Microsoft passed on an option to, I think, spend another $12 billion with you. I know you placed that with someone else immediately, but what do those two things kind of add up to? What would you tell investors? Because that is something that made some investors nervous.
Yeah. So look, one of the things that's made us incredibly effective.
The Alibaba chairman.
Yeah. So one of the things that's made us incredibly effective as a business is that we kind of take a really long-term view of where this space is going, and you're sitting at the first inning of a super cycle as artificial intelligence begins to integrate itself into the economy, into society. And our position on this is that our clients are telling us universally to continue to build. We cannot keep up with the scaling. And so, are there going to be places where there's too much infrastructure built? Sure. But that's not the day-to-day impact that we have. We have a roadmap of infrastructure. We have a wave of demand that we are unable to build fast enough to satiate.
How long is your average contract?
Yeah, so we enter into a very specific part of the compute market. Mm-hmm. We really focus on 4 to 5 year deals, and we have deals that are anywhere between 3 and 5. They have extensions that and options that go into the 6th and 7th year. It's pretty exciting. And so, in those contracts, our clients come to us. They buy a specific piece of infrastructure at a specific price for a long term. That allows us to go ahead into the debt markets and to underwrite that with some of the most sophisticated lenders in the world. And we marry the debt up to a commercial contract that is incredibly accretive for our company.
Right. One of those is with Blackstone. I think they loaned you close to $8 billion.
Yeah, so there was
with them and a group of others.
Yeah, it's a whole syndicate. It's Blackstone and BlackRock and PIMCO and Magnetar and Carlyle. I mean, it's really a who's who within in the private lending space that came in and understood our contracts and understood the technology and understood the offtake, and were able to underwrite that transaction at enormous scale because of the quality of the entire package that we delivered to the market.